In this video, I'm going to cover the whole entire market in terms of Dow Jones, S&P 500, and Nasdaq, including economic calendar and 10-year treasury. In terms of the market overall, this is a look at Dow Jones, but in my viewpoint, it kind of predicts a little bit of the future versus the Nasdaq and S&P because it's the 30 large caps. But it looks like it's kind of in a way in an area where it's going to start reversing to the upside. Now, this is dating back since 2001, have an upward trend resistance line, an upward trend support level, multiple touch points here, and multiple touch points, especially for the resistance level. And then there's 4 touch points here if I zoom in. This is the 5-year chart. But we are approaching the upward trend support level. Now, tomorrow is more of an important day. If I go to the economic calendar, for Friday, May 31st, we have 8:30 a.m. We have personal income, personal spending, PCE index, which is very important, PCE year over year. So in terms of PCE, it's an inflation number, and the Fed regards it as more accurate versus the CPI and PPI inflation numbers. Then we have core PCE index, core PCE year over year. Now, what the Fed looks at predominantly is the core PCE. So for the core PCE index, previously it was 0.3. This time around, they're expecting 0.2. So it is on the low end. So keep that in mind. And then at the core PCE year over year, it was 2.8 previously, and they're expecting 2.8 this time around. Now, the last PCE numbers that came in terms of inflation numbers, they were slightly higher, but the market didn't act too negatively to it. But this time, based off the last Fed FOMC meeting, they basically stated that the interest rate cut will be delayed for the most part. Now, originally going into this year, the market was expecting multiple rate cuts. Then it's dwindled down to potentially 1 or 2 kind of, but then it was down to 1 to 1 to or 0 now. And them delaying it is almost kind of pointing to the fact that maybe there might not be one for this year. So the market's looking for these data points because the Fed keeps on stating that we'll assess it based off when we get the data points, so on and so forth at the time, so on, like moving forward. So within these data points, every single day that they end up getting introduced will be an important day. For example, like today on Thursday, May 30th, 2024, we saw the end of trading day, the markets were going down for anticipation of these inflation numbers. So again, they get released at 8:30 a.m. and in a way, even though I'm going to go over the technical analysis in terms of support levels and resistance levels, but the resistance levels are not really that important for tomorrow. I'd say more of the support levels, but I'm going to cover both because even though my viewpoint, I'm not a professional, by the way, so please do your own due diligence and research before buying and selling. Even though I think the markets will be going down tomorrow based off technicals, based off my opinion and all stuff for the inflation numbers, there's a chance it could go up to the upside. Again, we are close to a support level to reverse to the upside. Even though the indications are not showing strong indications to reverse the upside besides the fact that we're support level, but I'm going to cover the resistance levels just in case if we do go reverse to the upside. And then we have at 9:45 a.m. we have Chicago Business Barometer, PMI. So that's at 9:45 a.m. Now in terms of 10-year Treasury, we have 4.544%. So in a way, it has been rising before, but then it's slightly decreasing as of recent. And then in terms of analysis, again, like I stated, we're approaching the upward trend support level. Now, if you look at the MACD line, this is in terms of if it's moving in the bearish or bullish movement, it is pretty much indicating stronger downside, right? So in terms of long-term, more downside. And then the 1-year chart indicating additional strength for bearish movement. 6-month chart, bearish movement still. 3-month chart, trying to reverse to the upside, so almost kind of helping the fact that maybe it could reverse to the upside. And 1-month chart, bullish movement. So 3-month bullish movement and 1-month bullish movement. So can we reverse the upside? That is possible. We are approaching this upward trend support level, and we've seen before without even touching the upward trend support level, we've already reversed the upside, and we're pretty much horizontally at that same point. So if the inflation numbers come in better than expected, indicating that inflation is getting reduced, so then that way it would kind of fuel the markets to believe that the Fed will see that they are getting closer to their 2% target. Currently, inflation's at 3.4%, like I've shown in past videos. So 3.4% to get to the target of 2%, based off the way the Fed wants to reduce their interest rate, the inflation rate, they're assuming that rate cuts need to be held until they see further progress. Once they see further progress, like inflation data showing that inflation is getting lowered, then they could go ahead and cut interest rates. And then even though that they're saying it's going to be delayed, the market will take it as in they'll be able to cut it sooner rather than later. So yeah, there's that. Now, in terms of this upward trend support level, depending on when we hit it, the later we hit it, the higher the low will be. But currently right now, it's looking at 37,592 points, give or take. We're at 38,111 points. But again, it all depends. based off when we hit it. Now, if we were to jump up to the upside, potentially the market would go to 38,500, give or take. I'm basing off of the resistance level right here and the support level right here, a bunch of touch points. It just coincides perfectly horizontally right here. So that's what I'm thinking. If you think the market is going to fly up completely, then it's going to collide with these moving averages right about here, hitting about 39,000 points. I don't think we're going to go to the upside, but anything is possible if, again, inflation comes in better than expected. So inflation is getting reduced. If it's worse than expected, and inflation is increasing, then we're going to end up keep dropping. Now, if it's subpar, I should state, in my opinion, if it's subpar, the market might just be flatlined a little bit or slightly lower, but ultimately end up trickling down to this upward trend support level potentially within the next few trading days, and then potentially reverse up to the upside. Now, if it's horrendous, then what could happen is potentially we could start trickling down to this support level, but before we get to this support level, we'll be hitting the moving average and so on and so forth, and then start hitting the other moving averages and potentially lower support levels. But until then, for the time being, we're looking at this upward trend support level first. Now, in terms of the S&P 500, I'm going to be looking at the ETF SPY, so SPY, and then for Nasdaq, I'm going to be looking at the S&P QQQ, which is the ETF for Nasdaq. But first, for SPY, we have an upward trend, the resistance line, upward trend support level for the major crashes. This dates back since 2010, and then potentially small false breakouts, but we have room to grow to the upside. We do. The only thing is, though, if you look, it has the same narrative as the Dow Jones. 5-year chart, MACD line, more predominant now to the downside. 1 year chart, bearish movement as well for the MACD line. 6-month chart, bearish movement. 3-month chart, bearish movement as well. And 1-month chart, bearish movement. Trying to curve up to the upside, though, I will say. But it looks like in terms of the S&P 500, it is indicating further downside. Now, again, because the data has to come out tomorrow, these readings in terms of support level and resistance levels are going to still play out. But in terms of predicting the movement, it is not easy because it's all based off the data tomorrow, regardless of the technicals, right? Because they could just be reversed regardless if the information is good or if the information is bad, it could be going to continue to the downside. So we'll see. But either way, we have this downward trend resistance line, plus in terms of VWAP and everything I've assessed. So in terms of lower points, right now we're sitting at $522.61. Basically, if tomorrow is in the bad side, like if the inflation comes higher than expected, but it's not too crazy, like I've stated in the past videos when I've shown in terms of the packet, there's $518 to $522 channel where it could just pretty much stay around that price point and consolidate a little bit, 518 to 522. Then next we would have support at the 515 based off the VWAP. And then after that, we have support between the $511 to $513 price point. Now, I don't think we're going to go lower than the $512, $511 for tomorrow. Later on, anything could be possible, so we have to assess it day by day for that. Now, to the upside, if you are optimistic that we have this downward trend resistance line, multiple touch points here as well. And to go to the upside, first, we have to break. First, it was horizontal resistance line, which is $525, but then here, downward trend resistance line showing $526 and some change, and then we collide with the moving average about the 527, 528. So even if we get past that, we're gonna have issues passing the 530 and some change, and I don't think we're gonna pass 530 and some change unless it's spectacular. Then you're looking at issues of passing the 532, and then you're gonna have to pass the all-time high about 534, 535. That's just the upside, but I personally don't think that's going to happen for tomorrow. But the reason why too also, there is a potential to reverse the upside given that there's inflation numbers are improving better than expected, right? And then at the same time, in terms of VIX volatility index, right now we're at 14.46 points, but it is at a price point where it's colliding with all the moving averages and so on and so forth. So it is also not just like it's just like the Dow Jones, showing at the perfect time for it to reverse. So for it to not reverse, but come down for the VIX. So if it comes down for the VIX, volatility index decreases, therefore more of an indication to go to the upside as well. So with that, with the Dow Jones showing reversal potential, support level plus VIX plus inflation number, if it comes in, not plus, but if it comes in perfectly, then it's just almost like it seems like it's all perfectly set up to go to the upside. I just don't think it's going to happen, but that's just my opinion though. Now, in terms of QQQ, which is ETF for Nasdaq, if we look at the 5-year chart, same thing applies, dating back since 2010, just in case for the new viewers. Upward trend resistance line, upward trend support level, again, dating back since 2010. Broke through, though, since 2020 to 2022, but then came back underneath. And you can see right here, went up to it, got knocked down, and then went up to it and potentially getting knocked down again, right? Now, are we going to the downside? Nasdaq was getting predominantly carried by Nvidia, so it looked like it was going to break up to the upside regardless, but it's being held back. So this was curved up earlier, MACD line, 5-year chart, but it's curving down to the downside potentially. So I don't know if it's going to fully commit to it, but the 1-year chart, it looks stronger than, not ever, but stronger than the past 2 trading days, I think, indicating potential crossover to a bearish movement, indicating further downside, right? You can see right about here too, it's pretty much, it's ready to go down. And when I zoomed into it, broke this upper trend support level as well. Now, in terms of 6-month chart, bearish movement, 3-month chart, bearish movement as well. And then the 1-month chart, bearish, but trying to cross over a little bit. So Nasdaq and S&P 500 are indicating further downside, but this is just technicals. Again, it almost does not matter based on only just the support and resistance levels are important. Other than that, predicting the movement based off, for example, MACD line, you really need the inflation numbers. That's literally what it is. But in terms of 3-month chart, like I showed before, the upward trend support / resistance level, resistance, support, 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 and then resistance right here, and then resistance, support. So this upward trend support level, resistance level is holding true. The only thing is, though, we saw momentum pull us down, and then we're trying to bounce. We had hit it as resistance. So because we broke through that, it's more showing to me that it is going to be to the downside, but we'll see. The next level we need to bounce off of is potentially at a $450 price point. But if the numbers are horrendous tomorrow for an inflation number, then I think 450 is not going to be an issue to break through. 450 and 449 some change. The next price point in terms of bouncing off support is about the $447 price point. Predominantly it was resistance before. We'll see if it holds up. Then it was the 445, but then 443 specifically. The 443 goes off the moving average, and I think it was the VWAP as well. I don't think we're going to go lower than 443. If we do, I'll let you guys know on the community posts on YouTube or X post, X on post, or post on X. And then in terms of the upside, so if you think we're going to go to the upside, first we have to hit the moving average right about here, about $453 and $454, give or take. Then the next moving average is about $456.41. But I remember there was a horizontal resistance at 455, but I could be wrong. Give or take, it was, 455 and some change. But 456, 457. And then if you're really optimistic, then going to go to the upside, we have to pretty much pass the all-time high of $462. The only reason I'm not covering the full details is I honestly don't think we're going to pass. Oh yeah, 459, 460 was definitely a resistance level. That was for sure. But $462 is the all-time high, and it is possible. It's just if the inflation comes lower than expected and we see major improvements. If you think this upward trend resistance line is going to come into play tomorrow, that's going to be insane. But if that is the case, dating back since 2010, you're looking at passing $466, $467. I just don't think that's going to happen, though, personally. But that's basically it for today's video. Thanks again for watching. Appreciate it. I'll see you guys next video. Peace.